Rhynhardt, thanks for your time today. Let's take a look at that MTN number that came out, first half numbers there. Just the reaction from the share price, it closed slightly lower today, 152 Rand. It was looking like it might close stronger today. It went all the way to 155 Rand. How's the market taken these numbers? Of course, so many moving parts, 21 countries, so many different regulatory environments, inflationary environments, and of course, economic environments to operate in.
Yes, Sam, definitely. I think from our point of view, I think if we look at the numbers, it was kind of very much in line with our expectations. So I don't think that people should be majorly disappointed or perhaps surprised on the upside. I think what stands out to me is that I think if I look at the revenue growth of about 17.5%, that is certainly very pleasing, and it's not to be sneezed at. It is certainly a very tough luck operating environment for most businesses. They managed to continue to grow subscribers up by about 11 million, and that was also relatively good. In some markets, they did slightly better than others. I thought that their performance in the South African market was quite good, and certainly in the last six months, period or so, I think that they probably did slightly better than some of the peer group. But if I look at a market like Nigeria, I think it's fairly clear to me that it is becoming increasingly difficult, I think, to operate there, that the competition is certainly heating up, and that they are experiencing negative real growth in revenues. And that is probably not a trend that is going to change. And then, coupled with the fact that, yes, they do operate in some jurisdictions that are not the most stable from a political point of view, and that will probably be, I think, continue to be a bit of an overhang on the share price. It's certainly not expensive. It trades at a discount to the peer group. It pays a relatively healthy dividend yield, but I don't think we'll probably see a major re-rating occurring for the MTN group anytime soon.
Yeah, let's move on to Sasol, because we saw a sharp reaction to that trading update just after 3 o'clock. The stock was trading at around 363 and it dropped 13 Rand today to close at 350. Looking at full year earnings, a 20 to 30% increase, and that, of course, would contrast to that 80% rise in earnings for the half year. I mean, why was the market so shocked by this? What type of number were they looking for?
Look, the second half was always going to be slower, so full year growth was never going to match up to the 80% odd growth in the first half. What I do think, though, is that it looks like it is relatively light relative to consensus expectations. So if you look at consensus, they were sitting at a number of about 48 Rand a share for the full year, and they earned about 34 Rand a share last year. So they are now guiding to earnings or headline earnings to be up 20 to 30%. So if we just take the midpoint of 25% higher, it looks like that they're going to earn close to 42 Rand. And now, if you compare that to the 48 Rand that I mentioned, it is a miss of greater than 10%. I think it is quite confusing because there are numerous once-offs in the result that they are alluding to. The Canadian shale gas assets are being impaired by just under R1 billion, so you can add back maybe about R1.50, I think, a share, like an earnings just on that once off. There's a higher depreciation charge for those assets of about 1.3 billion Rand that will probably stay with us for the next 3 to 4 years or so, but that's about 2 Rand a share that most people would not have had in their numbers. So just from those two once-off items, you probably have understated earnings of about R3.50 at least, which you should add back to that 42 Rand number. And then suddenly the miss doesn't seem as bad. Yeah. And then probably most importantly is also to point out that the Rand oil price is about 15% lower as at the end of June. So if you look at the cut-off of their balance sheet date.
Very quickly, Rhynhardt, I know you've got a specific... Just before we go, Rhynhardt, sorry. I know you've got a specific view on Old Mutual. 12% rise there in first half profits. You like the stock. Why is that?
Yes, we actually do like it, and I think firstly, I don't think it's expensive. It's trading at about a 30% discount to embedded value, whereas the South African peer group is trading at embedded value or just a marginal discount. But then I also think that the company now is very different to a couple of years ago. 70% of its embedded value is now in South Africa versus just over 50% in 2010. They've exited their Nordic operations. They are reducing exposure to the US life assets. They are listing the US asset management businesses, and their debt is also and the debt is almost halved in the past 2.5 years. So I think the rating is very unjustified, and I think it's probably only a matter of time for Mutual to re-rate relative to the peer group.
Rhynhardt, thank you so much for joining us today. Rhynhardt Roodt, Equity Analyst at Investec Asset Management.